morning and welcome everyone to the Trading Success Blueprint, the Beginners Online Trading webinar. My name is Danny and I will give you the webinar today. So to begin with, we will have a quick introduction to the company and to the facility we're looking at here, which is called the Web Trader. Okay, and you can trade through the browser. We'll speak about it more towards the webinar. The second part will be more practical. We'll look into the basics of how to open a position, how to design a position in a way that makes sense and suits to your ambitions. And then we will proceed possibly to the third part. If we'll have extra time, perhaps we'll look a little bit just at the basics of analysis. Okay, and it's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. Now, a very common question is if it's possible to receive the recording of the webinar, which will be uploaded to YouTube later on. So if you would like to access the recording of the webinar and watch it again, for any reason, you can just access it on our YouTube channel. Okay, you can go to Google, YouTube and search for AvaTrade, and in our channel you can find a huge library with a lot of content on this webinar and other webinars that has been recorded as well. Okay, so like I said, we will begin with an introduction to the company. We'll quickly get ourselves a notepad here for the notes. And as many of you know, we are a regulated company. We're here since 2006. In case you got a question or a query, you can address our customer service here at the bottom left with the chat or through the WhatsApp, whatever you prefer. And if you're using a different interface, of course, you're not going to have access to those buttons here. And you can just directly send them an email to cs@avatrade.com. On top of that, if you would like to receive assistance regarding trading, we can assign a senior account manager on your file, and you will receive dedicated assistance along your process. Senior account manager doesn't cost anything extra, and it depends on the eligibility of your account. So you can just go to the customer service and ask for a senior account manager to be assigned, and then you can get full support regarding trading. In terms of analysis, risk money management, making a plan and a strategy, all kind of things, the senior account manager is the go-to person. All right, on top of that, as I have explained, we have the interface here, which is called the Web Trader. To access this, you don't have to download or install anything. What you need to do is you need to go to our website and click on Web Trading in your personal area. Like I said, a Web Trader. Also, we have it on the phone, and it's called the AvaTrade's trading app. Used to be AvaGo, now it's AvaTrade's trading app. There are few unique features which I'm going to show you today. Let me also write down the other platforms just so we will know what otherwise we have. And you guys should know that all the MT4 and the Web Trader are connected, and the MetaTrader 5 and the Web Trader are connected as well. So what that means is that you can do your trades with MT4 and analyze it here, or vice versa. And you can review the positions that you took on MT4, MT5 in here. This interface interact with MT4 and MT5. Beside that, we have Ava Options and Ava Social. Ava Social is a unique app, which is a social media trading app. And what it allows you to do is it allows you to follow or copy another trader. Okay, there are two main features, copy and follow. Okay, the difference is if I will follow another trader, what will happen is I will get messages, okay, with the positions that the trader took, and it's up to me to either take it or or not to take it. Maybe use it for research or whatever else you want. But there will be uh, no automatic trading. There will be no positions opened. If I will copy another trader, okay, then I will also get the SMS, but the positions will be running automatically. Okay, so I will repeat that quickly. Follow means that I'm going to get messages and it's up to me to either execute that similarly or not. Copy means that my account will behave as if the trader that I'm copying is trading exactly the same way. The good thing about that app is it allows you to customize the difference. So if you copy another trader with bigger balance than yours, let's say 50,000 or 100,000, so of course at some point your account might not be able to withstand the necessary margin. So as I said, what can happen is if I'm copying another trader with much bigger balance than mine, what will happen is my account can get tangled and I won't have enough margin. So what I can do in this case to overcome that is I can customize the lot size, and I can say in the app, you can do it very easily. I can say I would like the strategy to be the same way, and then the positions will be launched under the same strategy, but the lot size, I don't want it to be the same. I want it to go for something like that. Of course, you don't have to do that, but when you have this ability, you can also copy it at the strategy and examine it before deciding whether to go to its full extent or just, like I said, with a smaller lot size. The app itself is free and I highly recommend you guys to try it. Let's proceed with the web trader that okay, let's begin from the left hand side. You saw one thing just before I carry on with the explanation. You saw that the interface here is quite customizable. If I'll click here on the arrows, it goes all the way up. As an addition, I can pick an instrument from here, okay, and then it will open me the chart. Then I can expand it again. I can pick an instrument from here. Just a second. Okay, maybe we'll go for commodities and maybe go for metals and maybe gold as an example. All right, and then I can choose it from here. Two different things. As you can see, when you have this blue lightning icon here, you understand that the instrument here has a signal. What does that mean, a signal? It means if I click it, it means that I have certain analysis pre-made with support and resistance. Okay, resistance will be the higher point above the chart. Currently, the price is 26.52. So this is okay. It's a bit light for me to see, but this is the same price as this. Okay, 26.52, and there are levels here with support and resistance. Okay, which I can also place. I'm not going to do that, but I can also place similarly to do further analysis. But if I don't want to, just look how easy it is to use the signal. So I click it once, then I click it again, and I have already have the stop loss and the take profit automatically placed on the position for me, ready to execute. Of course, I don't have to do that, and I can do it properly with a little bit of analysis, and I can also match the validity if I'm looking at the chart to compare the levels if I want to, and I want to examine what scenario makes more sense, if it's a sell or a buy. And I can also compare the levels of support and resistance, and I can also customize the lot size to what I want. But if I don't want to do any of those things, just 3 clicks and I am okay. So this is one to open the signal. This is another one to choose what scenario. 3 clicks and I'm good to go. Okay, that's basically it. Okay, this is one way to access the signals. Another way to access the signals is from the signals section. So if I'll click here on the signals section, I have this nice I have this nice list on top of my chart, and I can simply pick from what I want here what signals I want. Okay, so for instance, if you see those blank, column, if you see this line here, so why isn't it showing us the take profit and the stop loss similarly to other signals? The reason is that this signal, okay, so let's try, is already it already passed the analysis that was anticipated to get to. In other words, every signal begins at some point, which is this point. The signals, they begin at a certain price, and we expect the price to get to take profit or stop loss based on, okay, let's play it again, based on the levels that are mentioned here in the chart. Now, if those levels already occurred, okay, so that means that this signal is now futile, and it's not going to let us, it doesn't matter if I'm going to go with a buy or a sell, it's not going to let us enjoy the take profit and the stop loss. Okay, we're not going to have it. And why? Because again, the take profit and the stop loss are based on the levels that we see here. Just a second, Danny, what is the take profit and the stop loss? You're probably wondering. So let's first just understand the support and resistance, and then at the same time, okay, so as I said, the support and resistance are basically the highs of every chart. So as you can see here, we're not, let's also mark that line as well. Okay, we're not above the previous resistance. This is the resistance. Okay, and it appears that the resistance is $0.50 higher than what we are at right now. So it's very, very close. It's very close, okay, to this candle here, which we can see that the high is 75.49, and today it very, very close. It hasn't got there yet, but it has a possibility to get to. Why is that important? Who cares? Support, resistance, who cares? The reason that it's important is it can indicate a potential reversal. As we acknowledge this level here as a level that if it passes it, it could be a reason, it could be a result of something fundamental, right? Of course, if we look at the trend here, it also can be a result of something fundamental. And the support works the same way. So let's see. This is one level. We have other levels as well. Okay, and as I said, it can indicate potential reversal or a fundamental change. Now, it's important for us when I'm demonstrating the signals because the take profit and the stop loss are based on those levels. They are based on those levels. Okay, and what does the take profit and the stop loss are doing? They are pending orders. That means that the take profit, okay, stops the position with a profit. Okay, stop loss stops the position with a loss automatically. Okay, that's the important part. Automatically, that means that I don't have to be by the computer to just close the trade. Okay, it happens automatically. I mark those levels. Once it gets to those levels, it will close the position automatically, and I will have my profits or loss. Now, as we understood, crude oil is not useful. So if I'll try and I'll click on sell or buy, it doesn't happen. If I'll take something that's still intact, like S&P as an example, then we see, just a second, we'll see that if I'll click here buy, then we do get the stop loss and the take profit. Of course, I can also modify this if I want to. And I can also modify the lot size to something more, more to suit to my needs. Now, this is very simple. This is how you can use the signals on the mobile. You can, on your cell phone, you can also enable notifications and receive it as notifications, but not on the website. Okay, and then we can, of course, proceed our way down with the toolbar. So this is, we saw the signals. You guys basically saw 3 clicks, 1, 2, and we're good to go. We can do further analysis as I have explained as an addition, which I highly recommend, not just to go blindly with the signals without doing anything. Okay, if I'll go down, so let's quickly understand what the upper ones are as well. In here, I will find all my personal details. If I want to change something in my account, everything is in here. Okay, on this tab. Underneath is trade, where we are in the beginning. In here, it's the positions. In here is the orders, if I have any pending orders. In here is the history. We already saw that. And the news section is next. And in here, I can find all kind of information, fundamental information and articles that I can go through that hopefully will help me understand better what's the situation for the instruments. If I'll go down, okay, at the bottom of the article here, I have what instruments this has an impact on. So if I'll go through the articles here, I can see that it might be related to oil, but gold, Bitcoin, and pound versus dollar. Okay, also pre-Asia market. Okay, I have different categories. This is very simple. We get the idea. It's important to understand that the signals are not manufactured by AviTrade. They are sent by the Trading Central. Next, we have the discovery section. Inside the discovery section, we have sub menus. One of the sub menus that I like in here is called Market Buzz. If I'll click on Market Buzz, I'll have this sort of bubbles. Let's give it a moment. Yeah, they're called bubbles, and I can also shape it like a table, but I'd rather use the bubbles. Okay, and from those bubbles, I can choose. You see, I have here NVIDIA, Facebook, Microsoft, Tesla, Amazon, and so much more. If I'll go with what's in the middle, we'll go with NVIDIA. And in NVIDIA, we see all kind of different topics, and from these topics I can choose what I'm more into. I'm not going to go through all the articles. Let's suppose that I want to be specific. I want to know about integration and partnership, so I can click here on partnership, and it will summarize the articles related to partnership that I can go through and educate myself. Yeah, this section is very simple. We can go back, choose another one, maybe Apple as an example. Yeah, and then again, I can choose maybe product release or the new device or whatever I want. But anyway, you guys get the idea. It's super simple to access, and different categories here. Okay, if I'll go further down, I have also the economy calendar. In the economy calendar, we also have different categories. So we have high, medium, and low. At the moment, it seems like we are marked on high. Let's just quickly reset everything. Okay, now once we reset everything, we can get all kind of events. So we have I'm just gonna go through the structure real quick. We have the previous forecast actual and importance. This is how big of the impact is gonna hit the market. So we have low, medium, and high, as I have explained. As you can see, we have this red line here, which shows us the events past that line already took place. You can also see that the words are a little bit more darker grayish than the white words we see here, right? So that means that also you can see that it has a result. So if it has a result, so what that means that it already passed. Okay. Now, if we go further down, we can see. Okay, let's first filter this because we don't want to see everything. We want to be specific. Let's suppose we would like to focus maybe on the pound. Okay, if I'll click here on United Kingdom, it will summarize only United Kingdom news, and I'll see UK events only. Furthermore, I can say that I don't want to know about all those little events. I want to only focus on the high impact, so I'll click on high. And now it's showing me, let's click on today. Okay, so today we don't have anything, but if I'll click on today and then I'll click on maybe 2 weeks forward, then I'll see all the events, upcoming events. And we can see that the core inflation rate is on the 15th. Okay, and if I will want to follow this, or maybe the inflation rate, what I can do is I can add it to my calendar. Okay, so let's quickly recap everything that happened here. In the beginning, it showed us everything. Okay, if I'll click here on reset, it will bring me back to the default settings. So what we did is we click here on UK to filter UK. We clicked here on high to have only high impact events. And we also enabled the time by clicking here on the calendar. You see it now, it presents only today. But if you click again, then it draws this blue trail or whatever you want to call it, and it's showing you from the 8th until the 22nd. Okay, all the news with days and everything. Now, as I said, what I think that is the most useful feature in this calendar is that you can add it to your calendar by clicking here on the tiny calendar and then to choose to what calendar you want and just blend it into your events. And this is super comfortable because you don't have to think about when was the event and when to analyze it and when to watch the result. You can just put it in the calendar and you can specifically go to it and analyze it. Very, very nice and time efficient. All right, so let's bring that to default. Also this. Okay, we are great. All right, so I think we're ready to begin the second segment. We went through everything we should have had in the beginning. And let's get ourselves a nice instrument to analyze today. Let's maybe go with agriculture, and let's maybe go with corn. Right, it has a signal. Why not? Let's expand. Let's click here on the column price. If you can't move the chart up and down, it can be very frustrating to customize to get a specific picture of what you want to look at. So what you can do is you can click on here on the column price, drag it down, and then the chart goes up and down. What you also want to do is you would like to enable the crosshair here. So if you click on the crosshair and you click on the crosshair and then you move your hand, you have numbers. With a regular default crosshair, nothing happens. You can just click and drag. Now, if I would want specifically to look at corn, but I didn't want to find it in the lists and go back to the screen, what I can do is I can just click here on the name, and then I can delete the name and type corn and pick it from the list. Okay, and in here I can change the time frames. At the moment, when it's showing me 1D, that stands for days. 1 day. Every candle here is a day. Let me quickly show you. So this is the day. We are at the 8th, 7th, 6th, right? If I'll go, this is the weekend. This is why their candles are blunt. And here it's the 3rd, 2nd, the 1st, which the market was closed, and so on. Yes, and here we can also change the shape of the chart. Let's keep it candles for now. And in here we can change to a different layout if we would like to have multiple charts. Maybe we would like to have multiple charts, but you know, horizontally. Maybe you want to have 4 charts. Okay, you can, but you get the idea. In here, we can add an indicator. We just click and drag, then we click save. Okay, to get rid of it, click again, click X, click save. If I keep going to the right, before the sell and the buy, I have all kind of things here in the list that can help me place the analysis that I want. So basically, I can pick price lines to mark the levels, and I can get timelines to capture certain times to remember if I want to capture, for levels to make comparison on averages, when was the last time that it was on this price, and potentially what is the reasonable time frame that it can get back to that level. Okay, I can also leave a note at the moment. I'll click here on the text and then click in here that I can put whatever I want. Okay, and many more things, so you can place whatever you need to make sense for you. All right, now if I want to begin trading, I want to open a position, what I need to do is I need to click first on buy or sell to open the sidebar with the order entry. We can see that this also divides to 2 tabs. One is the order entry, the other one is instrument details. And we can see that corn at the moment is in a very strong buy. Okay, if we'll go to 5 minutes, okay, we can see that corn is $4 since yesterday. Okay, but we can see that the general trend here is very bullish. Corn since October rose 12%, right? Sorry, 15%, even more than that, and it's quite a lot. Okay, even more than that. So we can let's do it later. Let's get to analysis later. But at the moment, what I wanted to show you is the second tab. Okay, we have the order entry, which were in the beginning. And in here, we can find all the necessary information for the instrument, the means, the spread, the leverage, the margin. Those things are written outside as well, but it's here if you want. And in here, you have the overnight fees. Okay, let's go back. Also, the times that the market is open. Let's go back. In here, we design the position. How do we design the position? How can I know what lot size to use? What we spoke about a take profit and the stop loss. Let's enable them. How do I know what price to place here? When basically should I stop the position? Right? So corn is going up, but it's also turning around. I don't want to take a buy and then it will turn around and I will start making I will start losing, right? So I need to know what price to aim for. Let's suppose that the price that I think that corn can get to next is 475. Okay, if I don't want to drag the line manually and I want automatically a certain price, what I can do is I can click on the line, go to the coordinates, okay, through the white cogwheel here, change it to 475, and then if I want to maybe change the color as well. Then I have it. Okay, so how will I know what price to aim for? Is this a good price? What do you think, guys? Will it get to 475? Okay, so let's write down a few things. At the moment, if I just click buy and I don't do any preparations, will I know how much money I'm using, what to expect, what price to aim for? Of course, it won't be wise to just click here buy because we understand that every day can be different. And I can accidentally, if I take a buy here and corn goes down like 4 days ago, it might go down and make me lose, okay? Or even more than that, 2.5 weeks ago, it went even lower, okay? So I need to know what price to aim for, so I'll have time to close the position and take my profits, okay? Now, what price should I aim for? If I look at 475 as a price that it can get to, I need to also have measurement what is a reasonable time to get to. As you can see, if I look statistically at the length of the candle and I'll look roughly at the previous movements that we had, let's, okay, as an example, take yesterday. Okay, so if I'll quickly write down the numbers and I'm going to do open minus close, which is less than $1. And then I'm going to do high versus low. Then I have $6. Okay, what does that mean? That means that from the beginning of the market until the end of the market, there was $6 movements. This is the whole fluctuations that we see. This is the whole size of the candle. Okay, the body of the candle, which as you can see is much lower than the actual candle, is less than $1. That means that the results between when the market was open to when the market was closed, it was only 75 cents. But in between, it moved much more than that. Okay. Yeah. Now, if I'll think about it as my average, and I can assume, okay, $6 in the average. $6 is the average per day for corn. Of course, the problem here, guys, is that taking numbers from one candle is not an average. Taking numbers from one candle is just one candle, right? What I need to do is I basically need to accumulate a group of candles. I need to go back and do the same subtraction and calculation that I did with this candle, and that can be very time consuming. Okay, to write down all the open, high, low, and close for every candle, and then adding it and dividing it by the number of candles we took. This can be very time consuming, and there are room for mistakes. So what we can do instead is we can apply an indicator that will help us draw an average from the previous past few candles. How does that work? We'll click here on FX indicators. We'll search for average true range. We'll click and drag it to the right. We have few settings here, different types of averages. Okay, and we have the length, which is the number of candles we want the ATR to go back. At the moment, it's marked on 14. Therefore, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4. This is how far it will get to. And if I'll mark it to 10, it's going to give me an average based on 10. I can also change the color to something else and then click Save. And now it's showing us that $6 is definitely not an average movement for corn. at least not according to the past 14 candles, maybe specifically for yesterday. And now if I see 3.78 and I'll compare it with the initial price that I targeted, I see that it's very far away. Well, it's not too far away, but per day to expect it to get from here to here, which is almost $20, okay, it's not in the range. It might happen. It might happen. I think there were cases. You see, there are cases, exceptional cases, when the economy is it's not even 20. Okay, but you guys get the point. Sometimes there are movements higher than the average. Sometimes there are movements lower than the average. You can see that there are different size of candles on the graph. Okay, but at least it gives us proportion what is realistic or not realistic. And if I'll target this price to occur in a day, I understand that it might be too far away. What would be a realistic price is, let's see, we are with a buy, okay. What can be a realistic price? Okay, since we are with a buy and we would like to place the take profit, we've learned in the beginning of the webinar, the take profit closes the position automatically with the profit. So what I can do is I can add it on top of the price, the current price 457, and I can add the average movement, which brings us, okay, to 461. And 461 is, okay, again, if I want to just change it from the coordinates, I can do so. And now we can see that this is on average what I can expect corn to make. Of course, I'm not obligated to rely on this number, but if I want to base my take profit on the average, this is how it goes. Okay, same apply with the stop loss. So what I can do is I can also, instead of adding it to the price, I can subtract it from the price, since the stop loss needs to be designed in a lower price than just a second. Okay. Just a second. All right. So since we have 1 unit, as we can see, if it goes down $3, we can lose $3, and if it goes up, let's also be precise about that. Okay, and if it goes up $3, we can also gain $3. However, with this take profit and stop loss in mind, still, this is not what I want to make. It's okay, so I know what price is realistic, and I set my take profit and the stop loss based on that, and that is not bad. But I'm not really here to make $3. I'm here to make maybe 1,000 would be not bad. Okay, so what I can do, let's find our notepad. So what I can do is I can write down the target that I have, which is 1,000, and I can also put the duration, which is 1 day. I'll be honest and tell you guys that I think that 1 day to make $1,000 with $10,000 account, it might be challenging. Let's maybe change it to weeks, see how weeks looks like. Okay, yeah. Then we get bigger average as well. Yeah, that looks more realistic. Okay. In a week, 13.4. Let's do this with a calculator real quick. Okay, so you saw how I used the ATR. I just added to the price. I just added to the price. Since with a buy, our ambition is that the value will be higher, right? For the stop loss, what do we need to do? We need to subtract it. So we will subtract it from the price, current price, of course. Okay, and this is our stop loss. Okay, and now if we match the numbers, we see that $13 movement can give us $13. Okay, but to get to 1,000, we need to increase the units that we take. Since the amount of profits or loss that we're gonna make is based on the number of units that we have over the price difference from the entry. So movements of 13 versus 1 unit will give us 13. If I would have 10, 130. If I would have 100, 1,300, right? Very, very simple. Okay, so how many do we need to get to 1,000? What we can do is, okay, just a second, we'll write down ATR, and I'm also gonna adjust it a little bit to have a round number. So I'll go for potential average movement, which will be 10. Of course, 10 is in the range since 10 is lower than 13. So if it can move 13, it can most definitely move 10 since it's less. Okay, so we're just gonna adjust it to 10 and quickly adjust that to 10 as well. And then we have this and we have that. Okay, and that is just great. Okay, and now we have take profit and stop loss. We can make 1,000, we can lose 1,000. Maybe the ratio is not too great, but we'll fix it in a moment. Okay, and the number of units we need is, let's see, it's 100. Okay, well, seems like. Okay, but how did we get to 100? What we need to do is we need to go target divided by movements equals units. In this case, it's because we have $10 per bushel. Okay, 456 is where it's at right now. We targeted 466, which is $10 higher, and we could target the stop loss $10 lower. That means $10 to make or lose. So $10 per bushel brings us to 100. Okay. Now, the biggest problem that I have now is that I can make and lose the same amount, which I'm not really a big fan of. Okay. What I would prefer is a ratio of maybe 1 to 2. For instance, I would be happy maybe potentially making 1,000 and maybe losing a maximum of 500. So what do I need to do? Okay, what I need to do, I can do one of two things. if I want to minimize my loss, I can do one of two things. Just a second to clarify what's happening here. Okay, to clarify, the take profit that we have is, just a second. Okay, this is, it's, you don't have to, I wrote it here, guys. This is nothing new, okay? I'm just copy and pasting what I have here. And this can give us 1,000 profit, and this can give us 1,000 loss. So how do we maintain the possible profit and minimize the loss? What we need to do is we need to get the stop loss closer to the entry. Okay, what does that mean? That means that the closer the stop loss will be to my entry, the less that I can lose. In other words, since this is a buy situation, if I'll click here on the plus, click like this, and I went for $5 away instead of $10 away, then I can lose half of the what I can make. Yeah. So this is, instead of $10 difference, this is $5 difference, and $5 difference over over 100 gets us 500. Okay. This way I can minimize my exposure while maintaining my profit, possible profit. And now, how would I know that I can take the position? Because we're talking about one lot. We're talking about 100 units. My account only has $10,000. So what I can do is I can do a quick calculation by writing down the price per unit. Price per unit is 457. Okay, and I'll multiply this by 100. Okay, number of units. And that equals value, which is 45,750. And now I have a leverage 1 to 10. What the leverage does is it multiplies buying and selling. Okay, and with the leverage in mind, since I multiplied as if I had 10 times more, I can just divide the value by the leverage, and then I have the margin impact. You guys don't need to do any of that if you're using the web trader, but if you're MT5 or MT4 user, you better know that. So we said the value divided by leverage equals margin impact, which in our case is 4,575. Very, very super simple. Okay. And like I said, you don't really need to do this by yourself. But if you're MT5 or MT4, it's not going to calculate it for you. So you better know how to at least know how much money you need. And keep in mind one more thing, guys. The fact that I can take the position here with 4,550 out of my 10,000 doesn't mean that it's recommended. And I'll explain to you why. Let's suppose that I have two similar positions. Okay, so quickly here, 4,550 times 2. How much is that? Okay, this is what I'm using to occupy two positions. Now that depends on my strategy. That depends how diversified I want to be. For instance, if I'm happy with two positions, again, I don't want to recommend to go using 90% of the account, but everybody can do what they want. But let's suppose that I want to be conservative and I want to have safety net of, I want a valuable margin to sustain the position if something doesn't go as I plan. Okay, that means that I need to maintain the margin level of my account. As you can see, there is a minimum amount that I need to open the position. Okay, there is also a margin level that I must maintain. And if I can't, what will happen is the platform will close the position for me. Okay, so make sure that you don't that when you before you open the position you see at the necessary margin, and you also check at the margin that you are at right now with your current positions. Because if you take too many positions and you get tangled with not enough margin to sustain the with not enough margin in your margin level, okay, what can happen is the platform will start closing your positions until you have the necessary margin. Okay, so or you can of course you can close the position by yourself, or you can add more funds. But the bottom line here is that this is something you want to pay attention to, and to always keep your margin level in a healthy level. Okay, so you can maintain the strategy. Now, as I said in a few moments that we have left, let's see how much time we have left. Just a second, guys. Okay, so it seems like we still have a few minutes. And what I would like to do with you guys is I would like to compare real quick the resistance that we had on May. Okay, on May. And we will see that half a year ago, when corn was very high, okay, this is, I think, the resistance we had before, right? Yeah. So we spoke about this on the when we presented the signal section. Okay, resistance will be the highs of the chart. Okay, which in this case it will be that point here, and we are looking at the bullish at the moment. We're looking at the bullish trend, and we can see that this is, as we spoke about it, this is roughly $20 away, right? Let's be precise and see. Okay. Now, how does this help us in any way? Okay, we can assume at the moment 475 being the resistance, since it couldn't break it one time, we can assume that this might happen again. Of course, we have to follow the fundamentals and see what's happening with corn and what's happening with the US dollar, and then we can see if it matches the trend that we're having now. It's also important to remember that if I would want to go for a buy, I can optimize my entry and I don't have to take the position right now where it's at the top. Okay, since we can see that they are up and down. For instance, if we'll look at this reversed hammer, we can see that even though it's green, okay, even though it's green, we see that it was rejected. It was actually rejected. Okay, this one you see they're looking almost the same, this candle and that candle. Okay, and it shows us that there is a potential reversal. Now again, it's not a formula and it can proceed going up. If I look at the general structure, there is no question that it's going up. We can see that it bounced back approximately a week and a half ago, a month and a half ago, but still at the long run, it seems like it's still going up. Now, If one of those candle will be followed by a vice versa candle, maybe another bearish or head and shoulders or something that would hint that it will potentially reverse, I might want to take a sell instead. But as long as we have this bullish structure here, I can think that I can keep with a buy until this point here. I might even want to take I might even want to target the take profit not on the resistance, maybe a little bit lower. And the reason is this bunch of candles over here. Okay, which you can see that it can get to it, but not necessarily pass it. Okay, if I'll compare it with the previous level, we can see that sometimes. So maybe I want to focus. Just a second. Maybe we'll put it with color. It's easier to understand. Okay, so maybe I'm not going to be bothered by what happened after the resistance, but only until the resistance. Okay, or if I want for the long run, maybe I'll keep the buy. But the idea here is that I might want to target this area here, and I might also want to take a position not where it's at right now, but in a lower price. And I can do this by placing the execute when price hits. This behave like a pending buy or a pending sell that we are used to from MT4 and MT5. So that means I can just pick maybe a little lower like this. 450, I can target 450 and say I would like to take a buy, but not now. I want to take it from 450. And I can adjust the rest of the numbers the same way that we've designed the position until now, applying the ATR, marking the take profit and stop loss based on that. I can also adjust it. I can also adjust the lot size. But you guys already have everything here written down, very, very simple. Guys, we are out of time for today. I hope you've learned at least one thing from this webinar. You're all welcome to join us for the live Q&A tomorrow. Until then, I wish you have a profitable week and have a good day.